1.5%. Under pressure is the FMCG pack, and that's on the back of earnings. HUL contributing to quite a bit of the downside for that pack as a whole. It's down about, it was down about 4%. Let's see where it is right now. And in fact, it's contributing to most of the fall right now for the benchmark as well as for the FMCG pack. Mika, you were looking at a few stocks as well, and quite a few reacting to earnings and significant developments.
Yeah, but some of them have paired from their low points. The first was the cement pack. You know, we have to the likes of Sagar Cement, Birla Corporation and Nuvoco Vistas had all weak Q2 numbers because of muted demand and the weak pricing in the cement industry all over India. We had Birla Corporation and Nuvoco Vistas actually slip into net losses while Sagar Cement expanded its net losses. We also have Railtel Corporation, which is buzzing because it's got a almost 145 crore order win and it's up 4% right now. You have Aster DM that has been buzzing since start of day. It's posted a good set of Q2 results. Net profit up 52% on a year-on-year basis. Even Thyrocare, posted its Q2 numbers, a margin uptick as well as strong profit growth. The stock has pared away from its day's highs, but it's up 2% nonetheless. Like you addressed at the start of the show, HUL under pressure, dragging the benchmark. But something that stands out is Sona BLW and Escorts Kubota. Now, Sona BLW posted a strong set of results. It's up 8% right now. They've also going to acquire Escorts Railway Division. And I think to talk more about on this, we have Puneet joining us. Puneet, how are the results for Sona BLW and what is the latest acquisition that the company has announced?
Well, definitely. It was a strong set of numbers that has met Bloomberg estimates as well. And, it's showing a pretty 17% revenue growth in this particular quarter versus 13% that was expected. EBITDA growth was also strong, growing by roughly 14.5%, coming at 252 odd crores versus expectation of 249 crores, right in there. And profit also came largely in line. Expectation of 144 crores of profits. That's coming versus expectations. Sorry, the number has come in at 144 versus expectation of 142 crores. Now, the talking point of this quarter was the acquisition of Escort Kubota's railway equipment division by Sona BLW. Now, they have acquired it at an enterprise value of roughly about 1,600 odd crores. And, Escort's railway division is one of the leading supplier of brakes and suspension system to the railway division. Now, Kubota's railway division reported roughly about 950 odd crores of revenue in the fiscal year of FY24, while EBIT margins also came in at 18.9%. So, it's a really high EBIT margin generating business that they are acquiring. Apart from that, the acquisition is also expected to be EPS accretive from the first year itself for Sona BLW. The thing is, Sona also raised roughly 2,400 odd crores via QIP in this particular quarter, and that will be used to fund this acquisition, apart from internal accruals that may be needed going forward as well. Now, apart from that, some key highlights of the quarter that I just want to talk about: 36% of battery electric vehicle revenue now, which is, a very high percentage of EVs forming the part of the total revenue for Sona BLW. It also has an order book of about 23,000 odd crores. That's roughly 7 times its fiscal year 24 revenues for the full year. So that gives a lot of order revenue visibility as well. Sona also has multiple EV programs that they're running, currently 56 of them. But just to end this discussion on the particular acquisition that we spoke about, how is it beneficial for both Escorts as well as Sona? For Escorts especially, Kubota, the Japanese partner, acquired a majority stakes in the Indian listed company, now has 53.3% stake, and they wanted to diversify away from the non-core business, which is the farm equipment business. So traditionally, to focus more on the business is the idea behind this, behind selling this very high profitable division for Kubota. They'll also get 1,600 odd crores. That's a huge sum in a year where the railway in the tractor division hasn't been faring well. And finally, what's the benefit of Sona BLW? Escorts division, it's a market leader in the segment. It's a three-way split market. There are other two players that are foreign players, so it gets a direct entry into the system. It also, one of the oldest legacy business, started back in 1961, and the acquisition forms roughly about 30% of Sona's total revenue. So it will, be expected to close in FY26, and that will start reflecting in those revenues. So overall, a big thumbs up to both, both players. I think we are seeing some profit correction for Escorts because it's a very high margin business compared to a traditional business, but it will get 1,600 odd crores. And for Sona specifically, it's a very good acquisition, new segment as well as growth levers as well.
Yeah, if I remember correctly, and there were quite a few numbers that you pointed out, Puneet, 18+% EBIT margins for the railway business?
Yes, definitely. It's 18.9% for FY24, and Sona traditionally does about 26, 27. So it's that's for EBITDA margin. But overall, it's a growth engine in a newer segment that they weren't present in.
Certainly, absolutely. Thanks so much for giving us that perspective. In fact, that's a perfect opportunity for me to get our experts on. We've got Astha Jain, Senior Research Analyst at Haim Securities, and Kush Bora, who's the founder of kushbora.com. Thanks so much, as always, to the both of you for taking the time. Astha, I will come to you first on this pair, but particularly on Sona BLW. Of course, and the earnings were in line with expectations. The big talking point, however, as Puneet has just pointed out, is the acquisition of that railway business and the addition of 30% of revenue in FY26. What do you make of this development, and would you buy at this juncture?
Hi, good morning to all of you. Talking about this latest development, I think it is what we can say is completely APS accretive for the Sona BLW's business, because railway equipment division, I mean, this is the one segment which has high entry barriers. And RED of this Escorts Kubota, I think they has over 60 years of experience in the same. So now having such strong component, I mean, in your product portfolio now, apart from that, we know that there are significant entry barriers to the railway equipment division. The company is well placed for this type of, segment. And I think for that reason, we have seen a strong rise in these stock prices. Looking after the results as well, we are positive on this counter, because results were also very good. So talking about both these developments, I think it is a buy candidate, and one can make an entry into the counter. Initial price target which I would like to give to the stock is at around 770 to 780 odd levels.
Positive outlook for Sona BLW, but that brings us to the next segment of our show, where we get your viewer queries answered. And if you want to send us a query, you have a number flashing down on the screen. Please WhatsApp your query to us. And if you're tuning in for the first time, do let us know your name and where you're coming in from. And that brings us to the first query of the day, which is from Ramu, who's from Hyderabad. Now, he bought RVNL shares, 180 shares to be specific, at a rate of 534, but he's currently facing a loss of around 17,000. And he's asking whether he should hold or sell his position. Kush, I'll come to you. How does RVNL look on the charts?
Hi, a very good morning. Well, the stock has seen a lot of downward pressure. The stock is reeling under a lot of pressure. But I will take heart from the fact that, the stock is now close to the support zone of 420, 425. It's rebounded from those levels a couple of times. Plus, now if you see, the volumes on the downside have actually thinned, which means that, a lot of supply pressure is now coming to an end. So it will not be a bad idea to continue to hold. Maybe you can place a stop loss just under that, support zone, which is close to, let's say, 418, 415 kind of levels. There could be a turnaround in, some of these railway names. We are seeing some traction in the likes of, a Texrail, JWL, Jupiter Wagons. So my suggestion, if it's from a medium-term perspective, not a bad idea to continue to hold. There could be a rebound that is on the cards for, some of these names now.
All right. Ease My Trip is the next counter that we're talking about, and Vandana from Karnataka has asked this question. She's asking whether it can be bought at the current market price of around 30 rupees. The stock has been under pressure this year, and also you've seen significant selling by promoters. Astha, if I remember correctly, this is either last month or the month before that, and I think it was last month, where you saw a significant selling by promoters through block sales, block trades. What do you make of this counter, at least the business? Would you buy into this for the long term?
Not at this point of a time, because yes, when we know that when promoters are selling into any counter, then it is not a good news for the markets also, because it creates some sort of, concerns about the promoters selling their stake. So I'm not liking this factor as of now, and I don't want that investor can face any sort of risk at this juncture. So it's better to wait for more time, let the clarity come on that part, and then make entry to this counter. So right now, my idea here is to stay away from this counter.
Got it. To stay away from Ease My Trip. The next query is from Gopal, who's from the United States of America. And he's asking for the long-term call on NHPC. The stock is up 2%, and he's holding shares at an average price of 101.2. Asa, I'll come to you again. What's your long-term view on NHPC? Is it bullish or bearish in nature?
So talking about NHPC, long-term call is definitely positive on this counter. And we are positive on this counter with a price target, which we are suggesting to our clients as well, is at around 95 odd levels. So now talking about this counter in particular, we think that the upcoming results will be very strong for this counter, and the kind of industry demand the company is facing, I think that will really help the company boosting strong margins also going ahead. So positive on this counter in the longer term, because valuations are concerned. That's why we have seen a correction few days back, but I think now it is a better candidate to enter on. So our idea here is to make an entry also into this counter. If someone has this counter in the portfolio, then they can hold it. Price target, which we are suggesting for this counter, is at around 90 to 95 odd levels.
We normally go to either fundamental or technical expert. I'm going to make an exception on this particular counter, and this is HUL. And there's obvious reasons why. The stock is under quite a bit of pressure. Not every day that you see a crack of 6.8%. And it's at the low point of the day right now, HUL. The question is from Vishakha. She's asking whether she should buy it right now and whether we can see further downside. So Kush, first on the charts, at least the shorter term charts, if you can look at and you can see, is this a good buying opportunity, or would you wait for the dust to settle on HUL?
The latter, Alex, because if you see, we kind of, before the markets knew that the results weren't great, and the stock would perhaps have a gap down. It's extended the fall from there on as well. Even now as we speak, the stock is at the low point of the day. Now, a very near-term support, or rather a medium-term support for this one, comes in at 2400, 2425, that zone. So if that indeed gets protected, then perhaps for a trading bounce, this can be considered. But otherwise, my suggestion would be to stay out, because even before the results came out, the stock and even the sector, a lot of stocks in the sector were actually trading down. So you wouldn't want to perhaps place a contrarian bet, especially in a market which is already a little wobbly. So my suggestion: stay away from Hindustan Unilever. From a near-term perspective, you're looking at a support zone around the 24-25 mark.
Said that. I can take that for quite a few stocks, but the counterpoint to that, of course, Kush, is that HUL has for the longest time been a portfolio stock. And a lot of people would say, on a day where you get a 7% drop, just blindly pick it up. Asta, is that something that you would agree with if you're looking at adding this to your portfolio? If you don't have HUL, or if you have HUL, and if you've been holding for some time, is this an opportunity to add, or are you concerned with some of the statements that the management has made with regard to pricing, with regard to the demand trends in the urban space?
Yes, we are concerned. And see, when management is not optimistic, when markets are not supporting, then I think it is not a good idea to make an entry into the counter. Let the counter settle first and then make entry. Because I think the risk-reward ratio will never be in our favor if we make such kind of a call. Now, talking about the HUL in particular, definitely miss in the volume growth, which we have seen from this counter, but the core portfolio is still performing, in which there's a home care and beauty segment is coming. So core portfolio is still performing well, but even the management is not very much optimistic. So we are not very much optimistic at this point of a time. And in fact, we are not recommending it to buy at these levels. Let the stock fall more, because I think markets always punish the counters where the results are not up to the mark or not up to the expectation, because price is nothing. It is ultimate a function of the expectations in the earnings. So right now, I think the stock can correct more. So it is not a better time to enter into the counter. Let the stock fall more and then make an entry. And for those who have this counter in their portfolio, they can hold it for the longer term, because I think in the coming 3 to 6 months, we can again see revival in the urban demand. So maybe for next 6 months, it can be a good story to hold on. So my idea is hold for the long term if you have this portfolio in the counter, but not buy at the current levels.
Hold if you have it, but not buy. Wait for the stock to correct a little bit. But the next query we have coming in is about Hindustan Oil Exploration Company. Now, the viewer is currently holding 100 shares at a price of 110 rupees. And he's asking for a suggested target and whether he should hold or book his profits now. Kush, I'll come to you. Do you feel we have more upside for HOEC? How do the charts look like?
Well, not too encouraging. The only saving grace in this one is that the buying price is fairly low, and despite the kind of a drawdown that you've had from those 300 kind of levels, the stock was at the the viewer or the buyer is still in profit. So my suggestion would be to take money off the table. There could be a rebound around the corner, but that could also get sold into. So my suggestion would be to exit Hindustan Oil Exploration.
All right. Teja has got the next question. He's writing in from Bengaluru asking about Bharti Airtel. Bought at a price of 1,726. Let's pull up the chart and see where it's trading. It's below that buy price. But it's an interesting question. Should he hold or should he sell? Asta, we've seen quite a performance for Bharti Airtel on the stock market, of course, but also there's the improvement in the pricing mechanics in the space. You're seeing ARPU that is likely to go up in the second half of the year. So from a fundamental perspective also, it's a good time to be looking at the telecom space. What would you say about holding Bharti Airtel, and what are your own expectations about the pricing?
So our expectation is that, first of all, yes, we are recommending a hold on this counter. And our expectation is that the initiative which the company is taking, right, they are now bolstering their rural distribution part and their, in fact, network coverage also. So, and they are making significant investments into those parts. So I think that will be really a revenue accretive as well as a margin accretive for this counter. So we are expecting this counter to perform strongly in the coming days also. But markets are not supportive, so that is one of the major reasons that we are not seeing that kind of a stock price momentum. But in the long term, it is a good story to hold on, and we are recommending hold on this counter. Initial price target, which we would like to give to this counter, is at around 1750 odd levels.
1750 initial target. The next query is from Venkatesh from Chennai, and this is about Steel Authority of India. Now, the stock has not done so well this year, and he's purchased SAIL at a price of 135. We're currently trading much lower than that at a quantity of 1,125. He's asking advice of whether he should hold or add more to the average at this cost, and whether he should hold the stock for the next 3 to 6 months. Asa, I'll come to you. I mean, the whole ferrous space has not done so well this year. What's the outlook for the second half, because the view is asked for the next 3 to 6 months?
So talking about, first of all, in SAIL, there is one issue with the counter is that they have done significant capex, and the market has some concerns regarding those capex also, because it requires significant investment. So that might be one of the reasons that we have seen the stock prices not performing so well. Although what we are seeing, the markets not in a good shape in last 2 months, but stock prices are not able to perform even before that also. So, the significant capex is the major concerns for the market. Apart from that, results are fine, and we are expecting the results to be not so good from this counter going ahead also. So our idea here is, if it is a long-term view only, that means time horizon can be more than 6 months, then stay invested in the counter. In the short term, we can see some sort of correction in the stock prices, even from here also. So long-term view, then hold, and price target can be set at around 130 to 132 odd levels, but in the long term.
All right. We've got another question for a 1-year time frame, and I'm coming to you on this one, Kush. It's on Jindal Stainless. The stock is currently trading at 662.5. It's still up year to date, though it's given up quite a bit of ground over the last month or so. It's up about 15.5%. But if I look at the 1 month performance, it's down as much as 15.8% or thereabouts. So it's not done too well. The question is, would you buy at this juncture for a period of 1 year?
Well, not a bad idea to start nibbling into this one. I wouldn't go out and buy the entire quantity just yet. Now, the reason for that is that the stock has a very strong support zone near the 625 mark. So that should act as your positional stop loss. Even around this week, the stock has tested that level once and rebounded from there. So a couple of times we've seen the stock rebound from that level. That should act as a strong stop loss. While, yes, you should go out and buy 50% of the quantity, the rest should be bought once 725 kind of levels are crossed. In the near term, the support zone of 625 will act as your stop loss. And for about a year's target, I think you're looking at a 775. And once that is taken out, the 830 also, which was the recent high of the stock. So not a bad idea to, as I said, start nibbling. Don't go out and buy the entire quantity at one shot.
Okay, thank you for that. The next query is from Jaya, who's from Bangalore, and this is about HAL. She's asked a view on HAL, which is bought at the price of 4,527, and asking whether she should hold, exit, or add more for the long-term view. Asta, how is the stock looking at the current price? We've seen the defense pack seeing a significant correction over the past few months, but how does the stock look right now?
So what we are recommending, because she has three queries whether to hold or to enter more or to sell. So our idea here is to hold, first of all, not to make entry at this level. Maybe let the stock fall more till the level of 4,000 odd levels, and then one can make an entry into this counter. So this counter is looking good to us because their order pipeline is strong, the execution is strong. But again, valuations are the concern. And what we are seeing that when earnings growth will be not in that proportion in which the valuations are there, then definitely markets always punish such sort of stocks. And we can see a correction from here also. So my idea here is to just hold this counter, not to add more, because we are expecting some sort of more decline in the stock prices. So at that time, it offers more a better opportunity to enter into the counter. Right now, just hold on the stock. An initial price target which can be maintained on this counter is at around 4,600 to 4,700.
Okay. Special request from Darshan, who's writing in from Surat in Gujarat. He's asking me to read out the entire question as he's written it. I will do my best, Darshan. He wants to invest 30,000 rupees at... okay, and he's asking what price he should invest in. 10,000 shares in Cochin Shipyard. I believe that is the question. He wants to invest 30,000 rupees, so he would like to invest it in 3 parts. Please give me advice accordingly. The remaining 20,000 he wants to invest in 2 phases. In which phase should he look at acquiring this in 10,000 buckets? He will book profit in the stock in August of 2025. What will the target be at that point? The stock is down over the last few months because of the kind of selling pressure that it has witnessed, and also because of the kind of run-up it has had. At what price will it be trading in 2025? So basically less than a year from now. And what are the short-term prospects so he can look to book profits? I'm not entirely sure what the entire strategy is here, Kush. I believe that he wants to buy a certain amount now, book a little bit of profit, and then buy more at a later stage down the line in the same counter.
Either that or Alex, if I understood this question correctly, I think his strategy is to buy this in a staggered manner and book it out somewhere in the August of 2025. As the question reads. And I like how he's framed the last part, which is what will the price be in August of 2025. I wish I had my crystal ball today. Sadly, I don't. But from a levels perspective, I think he's well framed. His objective is clear. So I think it's not a bad idea to start accumulating the stock at the current level, because the stock is significantly off the highs. Now, on the downside, the other significant level that you're looking at is 1250, and then there is a support zone of 1100. So these are the levels that you can look at in terms of buying or averaging on the downward, which again I don't suggest. I'm not a big fan of averaging on the downward, but since it's a very specific question, so about 1100 and 1250. And the current level. These are the 3 levels where he can go out and accumulate the stock partially. There's a possibility that now since a lot of these stocks have already had a bit of a crash, volumes are thinning on the downside. There could be a recovery around the corner. From a year's perspective, I would give it that there's a possibility that the stock could hit the 1900 mark, which was the resistance level. So I think he'll be in a fairly good average. And if the stock does kind of touch 1900 by by August of 2025. He would be sitting on a smart profit. So those are the levels, and I hope I've answered the question just the way he intended to ask it.
More or less. I mean, I'm pretty satisfied. I hope he is. But I will also very quickly take a question to Asta on this counter. Of course, over the last month, it has lost about 21%. But this is in the context of a stock that is still at this juncture a doubler compared with a year ago, or at the start of the year, if I'm not mistaken. Let's see. I'm actually pulling up the year-to-date chart as I'm speaking. Yeah, year-to-date. In 2024, it's more than doubled. So the question is, would you buy at this point and stagger your buying over the next 1 year? Ask the quick answer.
No, we will not buy at this point, because in fact we know that a few days back also OFS came and the floor price there was set at around 1540. So even we have seen the correction from those levels as well. So markets are not sustaining these valuations as of now also. So my idea here is wait for more fall. I think till 1300 or 1350, these are the better levels to make an entry into the counter, not at this point of time. So my idea here is to wait for more decline and then make an entry into this counter, because the kind of OFS response we saw, and again it has been slipped below the floor price of 1540, that itself indicates that still there is a valuation concern.
All right, so on that note, we have to slip into a very quick break. We'll be back on the other side to take more of your questions, so do stay tuned.
welcome back. You're watching Ask Profit, where we get your viewer queries answered. Our next query is from Lokesh Kataria, who's from Mumbai, and he bought PNC Infra at a buy price of 494.41 rupees 2 months ago. He's asking whether he should hold or cut his losses, which are around 30,000 right now. He's looking for the outlook for the next 6 to 12 months. Kush, I'll come to you. I mean, the stock is trading much lower than the price that Lokesh bought it at. How do the charts look?
Well, I think the stock was already under a bit of pressure before yesterday, or rather a couple of days of crack that it saw. Now, from a near-term perspective, the stock is for sure under pressure, but there could be a rebound trade because the stock's gone into oversold territories. Still, a lot of distance away from his buying price, but my suggestion would be to hold on to this one with a stop loss at 310. The stock could see a rebound to up until about 350 and 375 kind of levels. He should use those levels to exit. His loss from there on will be much lesser. May not get into a profit entirely, but hold on with a stop loss of 310.
The next counter that we're taking is from Hariom Karnal, who's writing in from Haryana. He's asking about Jindal Steel. Remember, we've taken Jindal Stainless already, and we've addressed that stock. But this is Jindal Steel, which he's acquired at a price of 1,050. He's asking whether he should add more and whether he can recover his loss. He's not specified what his time frame is. So I'm going to take it to you, Asta, on the fundamentals. How do you like Jindal Steel?
So first of all, the company has followed a deleveraging policy, which seems to be coming in very much favor of the company. And that's why we have seen the stock prices are also showing positive momentum. In fact, their capacity expansion plan is on the track because now they are scaling. They are scaling up their capacities. So I mean, these are scaling up of the capacity with deleveraging exercise in the balance sheet definitely will help the company in showing strong numbers in the future. So I am positive on this counter, recommending a hold at this level. In fact, buying on dip strategy can also be applied to this counter at around 880 odd levels with a price target of around 1100 to 1150 at the initial levels.
All right, the next question we have is from Karuna, who has some PN Gadgil Jewellers shares. Now, this company recently listed, and her question is whether she should buy some more shares or sell her position. We don't have the exact details on the positions, but Kush, I'll come to you. If someone had to, in terms of the outlook and the price target, how does PN Gadgil look on the charts?
We got very limited data, so I think I'm going to have to pass this one from a technical standpoint at least.
Okay. Asta, I'll come to you. I mean, the stock has pared away from its listing day gains. What's the outlook for PN Gadgil?
So this is basically a Maharashtra-based, company, and their major of the stores are located in the Maharashtra. I think 38 out of 39 stores are located in the Maharashtra. So they have this regional concentration, which can be one of the concern. But now talking about the IPO price, the IPO came in September itself at the higher band of around 480 rupees odd level. So from that, we have seen a strong rise, and still it is quoting at around 700 rupees. So my idea here is, because now the company is working on the diversification strategy as well. So let's see how this pans out to be there for the company in the future. So right now, just wait. Don't enter at these levels. Let the stock fall more. And then make entry into this counter because it is already much above than the issue price of 480 rupees. So my idea is to wait for making any sort of entry, although fundamentals looks good. But I think 650 or 630 are the good levels to make entry to this counter.
One of the stocks of the day, arguably, and in fact, it's a stock that gained quite handsomely at the start of the week as well on the back of Q2 results, Amber Enterprises. Let's pull up the chart and see what it's currently trading. And it's at very close to 7,000 levels, if I'm not mistaken. It is, in fact, at 6,994. We've got Mr. D. Mazumdar, who's writing in from Rourkela in Odisha, who's acquired it at the very attractive level of 1,300 rupees per share. He's got 20 shares and he's asking what the short-term targets are. Does it have further upside? Should he book partial profit? Kush, what an acquisition price. What is the strategy that he should employ?
I think congratulations are in order for Mr. Mazumdar for the kind of patience that he's shown with a stock. It's often one thing to catch a good stock, but it's completely different to sit on a profit this massive. So kudos on that. I think from a near-term perspective, it's not a bad idea to maybe book partially, and by partially, I don't even mean 50%, like about 25% or so, because the stocks run up quite a bit. There's been a bit of volume jump as well, but now it's approaching overheated territories. And in the past, when on technical indicators it has reached overheated territories, the stock has seen some for profit booking. So while the 7,000, 7150 kind of zones are the near-term kind of targets for it, it's already trading around those levels. You should book partially, 25%, hold the rest of the quantity, the momentum and the setup is quite strong. He can again re-enter and buy those quantities as and when the stock slips to a 67, 67.50 kind of levels. So maybe a bit of a trading bet with a limited quantity that he holds. But on the whole, the view is positive. Don't sell out on the chunk of your quantity that you're holding. Maybe a bit of partial profit booking is advisable.
Yeah, got it. The next question is on Zomato. It was buzzing yesterday. I mean, it started the day 4% lower, then it bucked up all those losses, was up 4%. It's under pressure today. And the next question is from Abhishek from Mumbai, who is currently holding 50 shares of Zomato at a level of 176. He's sitting on a 4K profit. He's asking if we should build up more. Asta, I'll come to you. Given that Zomato has now hiked its platform fee from 6 to 10 rupees, and this is something that's added to its revenues in the past as well, would you buy? Would you add more?
Yes, I would like to add more this counter because first of all, strong financial performance. We have seen strong jump in their gross order value, GOV. So that has also shown very strong growth. And I think the major segments are working in favor of the company. So it is a good long-term story. And we have seen that the business has now become a resilient one. As we have seen at this time when most of the earnings are not coming in that manner, this company has outperformed totally on the earnings front. So yes, one can make a entry into this counter also. Today it is 2% down, but I think no need to worry. Entry can be made at this level also, keeping long term in mind. Initial price target can be set at around 280 to 300 odd units.
Okay, all right. Next question we're taking is on Vodafone Idea, and we've got Shivi who's writing in and asking whether it should be retained or whether it should be sold. She's bought at a price of 11.5, which in the context of things and the way that the stock has moved in the recent past is slightly elevated levels. Kush, on the charts, would you hold on to this, and what is the kind of level that you would pay attention to?
Alex, I think it's a sell has been for a very long time for me. I would recommend an exit from this one. The other play in this sector, Bharti Airtel, that's one stock that has actually done phenomenally well. You'd perhaps want to be in that one if at all you want to be in this sector. From a levels perspective, it's broken all critical levels. From a medium-term perspective. However, you're looking at a 7.5 kind of a support zone on this one. If it does kind of hold, then it might consolidate for some time. But on the whole, the performance hasn't really been, any bit encouraging to suggest even a hold. My suggestion would be exit out of Vodafone. And if you want to, you could perhaps consider getting into a Bharti Airtel, after this round of profit booking that has set in.
Next question is from Surendra. This is about PFC. Now, they 1,700 shares were bought by Surendra at a price of 470 rupees, and he's asking whether he should hold it for another year. Asta, I'll come to you. What's your outlook on PFC?
So, because here the time horizon is a whole year, so I think there is, one can retain his position in this counter for at least 1 year. Now, talking about this counter, power sector in itself is looking good to us, and it is being the financing arm in the power segment. I think this company will really going to be benefit, and they will show strong margins also if I talk about their NIMs. So I think a good counter to stay invested in if horizon is 1 year. So here our initial price target is at around 480 to 490 odd levels, but for 1 year price targets can be upgraded, but right now one can continue holding this stock.
All right. Asa and Kush, it's time on the show to hit the rapid fire round, which is, as you know, we throw as many questions as possible over the course of the next 2 minutes at you, and you try and answer as many of them as possible. Quick answers would be appreciated. The first question is from Denny Mathew, who's writing in all the way from the UK, and he's asking about UPL, which he's bought at a price of 545. He's looking for a 1 to 2 month view. Kush, would you hold on to this?
Hold. Your stop loss is 520. The stock could cross your buying price.
Okay. Govind Bhatia from Dubai is asking about Larsen & Toubro. He's asking whether it can be bought at the current market price for a long term. On the fundamentals, Asta, would you say that this is a good buy?
At around buying on dips at around 3400 to 3380 odd levels. So not right now. On the buy on the dip strategy can be applied to this.
Okay, Vatsalya Asthana is writing about Tata Motors. She's been holding and she's been seeing prices deteriorate over the last month or so. Should she exit at this point or hold on? She hasn't mentioned a time frame, but would you hold on, Kush, at this point?
Yes, with a stop loss of 850, Tata Motors is a hold at the current juncture.
Okay, the next question is from Ayush, who's writing in from Lucknow. KNR Construction is the name of the counter. He's bought already 100 shares at a price of 345. Asta, on the fundamentals, would you hold on to this? It's at 289, so he's lost ground.
Yes, we will be holding this counter, and I think here the price target can be set at around 320 odd levels at the initial levels. So in the longer term, the counter seems to be good, but short term, maybe some fall can be expected, but there is no need to worry.
Okay, Akbar Ali from Navi Mumbai is asking about Jupiter Wagons, which he's bought a year ago at 433 rupees, 1,000 shares. The price has deteriorated since that point. Should he hold? He's got a 2-year perspective. Asta, on the fundamentals, do you have a view?
Jupiter Wagon from the 2-year perspective is a hold from our side, because in the 2 years we are expecting the counter to perform strongly on the financial front. Hold is the strategy which can be applied to this counter with the initial price target of around 520 to 530.
All right. And on that note, I'd like to thank both of you, Asta as well as Kush, for joining in, for answering all the questions that you did answer. Absolute pleasure having you on the program, and hopefully this has helped the viewers as well. That brings us to the end of this segment on Ask Profit, but we've got a great conversation lined up for you. In fact, I'm going to hand it over to my colleague and markets editor, Neeraj Shah, who's going to be in conversation, Neeraj, with Sonal Verma. I'm glad that this is happening, and I'm looking forward to this conversation.
Yep, I'm looking forward to this too ever since I read that note, Alex, though not for the right reasons, because the note suggests that the growth class of India looks half empty as per their 3 proprietary indices. And therefore, it's an absolute delight to have in Sonal Verma to try and understand what is it that they feel about the growth aspect, because a lot of FMCG firms and some others are already showing some chinks in the armor. Sonal, great having you. Thanks so much for joining in. And at the onset, I want to start off with something that you wrote at the start of the note, which is that high frequency growth indicators, according to you, were anyway signaling a slowdown since June. But now you're finding other proprietary indices talking about the same being more pronounced?
Yeah, Neeraj, thanks for having me. So, actually, the idea here is to do a more objective analysis of what's going on in growth. So this is not about what we think. It's about what actually the data are telling us. So we've used a combination of high-frequency real activity data covering consumption, investment, and exports, and brought it together into one aggregate index, which we call the Nomura India Coincident Activity Index. And what that is telling us is that on aggregate, there has been a sequential decline in underlying growth momentum. So even on a seasonally adjusted basis, the September quarter is quite soft. And two, on a year-over-year basis, the Nomura India Coincident Activity Index, which tends to track the broader GDP growth cycles pretty well, it is suggesting that the second quarter is likely to be slower than the first quarter. So as you recall, the first quarter, we had already seen GDP growth moderate to around 6.7%. So this is suggesting that growth is likely to moderate to potentially below 6.5% in the second quarter. And third, we also look at what's driving this. And what we find is that it's largely investment and industrial activity indicators that have seen a sharp slowdown. But in addition, some of the consumer discretionary sectors is also where we are seeing a moderation. So this is actually just based on the numbers that we have so far that are suggesting that when the GDP numbers are released for the second quarter in end November, it's likely to be much weaker than what RBI is expecting, which is at 7%.
Sonal, how big a concern is this? Because typically growth doesn't flip and flop. It tends to at times pick up a trend, right? So do you believe this is a trending lower kind of a trajectory we are in, or can a pickup in government spending or maybe private capex really thwart this downtrend, if you will?
Which is exactly the question we are asking ourselves. And what we've also constructed is actually a leading index for India's non-agriculture GDP growth cycles. And it has a lead of 1 quarter, so it gives us an insight into the third quarter of the financial year. And we see that the leading index has actually been moderating for the last 3 quarters. And the signal from the leading index is that the December quarter is also likely to be softer. We also see that our leading index, has moderated below the 100 threshold, which typically tends to be growth around trend. So the momentum is weakening, and we seem to be transitioning to below trend growth in the third quarter. And as you said, typically the growth cycles tend to have some lasting character. Like usually growth cycles last at least 4 quarters. And that to us is a signal that India is potentially entering a cyclical growth slowdown. I say cyclical because it's not a view on where India's medium-term growth is going to be. It's more about what the direction is of the business cycle in the next 12 months. And at this stage, the lead indicators are suggesting that it is going to moderate. Now, there will be certain components of growth that will pick up. For instance, like government spending is going to pick up, given it was quite soft in the first half of the financial year. But on aggregate, the signals are that there is likely to be a growth cycle moderation going forward.
Sonal, idiosyncratic factors you think, and now I'm telling you to move out from the realms of data that you have and put in your thinking hat. Idiosyncratic factors, inward-looking factors to India, or is this got largely to also do with the way the growth around the world or the lack of it is shaping up?
Yeah, I don't think this is globally driven. I mean, the export and related indicators have definitely been soft. But most of the moderation we see is more domestic demand-driven indicators. So it is investment and discretionary consumption-driven. I think when you look at the first half of the year, clearly there have been certain idiosyncratic factors that have been responsible for the moderation. Whether it is the elections and the slowdown in construction activity, or the heavy monsoons and the adverse impact of that, or the timing of different, calendar and impact on spending. But some of those things will reverse. So government spending is going to pick up, and we should see rural hold up. But there are other countervailing factors that are at play. So on, for one, on the credit side, we are continuing to see a moderation in credit growth, particularly consumer credit growth. And this is what policy wants. But on the other side of who's taking credit is a consumer, who will face constraint in terms of discretionary activity going forward. So we see moderation in credit growth as suggesting that there will be some impact on consumer activity going forward. And similarly, on the the urban demand side, we are seeing a moderation in salary growth. It was growing above 10%. That has moderated to around 5%. So the real income increase is actually much slower. Third, I think within the rural, we have seen a pickup, but there's some sort of a friction on food prices, and to some extent, certain elevated food prices, which we don't think is actually a major problem from a medium-term perspective, but it is hitting some of the urban low-income consumers. But also you have 50% or more than 40% of employment in India is still agriculture-driven. So when we try to squeeze out broader food inflation, it also has some adverse impact on food producers. So this balance between a food consumer and food producer, the friction is something that we are beginning to see. And finally, I think given the current picture on consumer as well as on where currently we are on the export cycle, I think this entire debate about whether private capex is picking up, whether it is broadening out, I think in the current environment where global and domestic demand picture is soft, it is quite unlikely that private capex is going to pick up. So I think, when we're thinking about the broader outlook for growth, there are components that will do better. But on aggregate, we do think there are countervailing forces, which is why we don't think it is just idiosyncratic factors that led to the moderation. There is an underlying cycle moderation that is underway as we speak.
Sonal, some bit of corporate commentary thus far has also indicated that. But of so many consumption firms that we've heard, and we've thus far heard from consumption companies largely, the capex-oriented firms yet to come, but the consumption-oriented firms have spoken about longer election season and extended monsoon being the reasons, and they are hopeful of recovery in the second half. So my question to you is, if there is a natural bit of a recovery that comes in from a base that is impacted because of unnatural quarters, if you will, and if there is, say, a bit of an overdrive in government capex, which has been subdued thus far in the first half, can that quell the downtick, even if it doesn't result in a big uptick, but can that kind of help cushion the downward trajectory? Because I heard you say that December also looks like it will be a soft quarter. Can both of these factors help the fall to be not so dramatic?
Yeah, I think we should see some positive offsets going forward. So one, of course, let's see how the festive season demand goes and to what extent the discounts do help boost consumer activity. So that's something we are monitoring as well. And second, we do think that government capex will see a faster pickup going forward. So that should be a driver of demand. And third, rural-related components, I mean, there are positives and negatives, but to the extent that production is better, you should see that do relatively fine, I would say. So those positive offsets are there. I think, if you look at what the RBI is projecting, their overall GDP growth projection for FY25, though, is at 7.2. And second half FY25 growth projections are closer to 7.4%. So the assumption is that we basically move up from 6.7 to 7 in Q2 and then closer to 7.5 in the second half of the financial year. What I'm saying is that the positive offsets that will be there in the next 6 months are playing against some of the softness we are seeing in terms of high interest rates, moderating credit growth, and still subdued global demand and exports in particular. So on net, we think it is quite unlikely that GDP growth is going to exceed 7% in Q2 for in Q3 or in the fourth quarter of the financial year. So we are basically projecting FY25 GDP growth at around 6.7%. And we are monitoring this. I mean, I think, the early signals, I would say, are flashing amber. Now, whether this has more legs or something changes is something we need to monitor. But the signals at this stage are flashing amber on the growth side, which makes us a bit cautious.
Yep, thanks for the warning sign as well. Sona, lovely note, and thanks for joining in today and giving us your perspective, and festive greetings to you and everybody in your team and family.
Thank you very much.
All right, and viewers, on that sobering note around growth, it's time to take a break. All the more reason for everybody to be careful and choosy about where is it that to choose to invest. Thanks for tuning in to Ask Profit.